They pushed down again, came back down today. I'm expecting Costco to come back down into. I think I put out a note yesterday too. Right about here, this line. Right about here, 494. Expecting Costco to test this number. Very, very, very likely. Maybe in bounce here. But so yesterday, I think Neophi was asking about selling. Right. So Costco, this is the reason I was saying wait for today to sell anything. If it drops below here and we go to next week and we sell probably around here, or we can sell even somewhere about here, 520. Right. Either of those cases is fine. That's just free money lying down there. Over here, yeah. Not seeing cost for anything below this number as of now. Uh, so we sell even 450. You can do even 425. There's just free money and cost and what is this? Options is a game of numbers, or so you just sell here, not here, but perhaps here, and hold it for a couple of days, make a 50% on this, and move out of this trade. All right. Nine. Anyways, I don't want to wait for everybody else. Let's get into this. I was glued to this chart, by the way. Let's get into ES. Um, yeah, 8:30, we saw this drop, and of course, the payroll came in better than expected, which means a negative, which means the Fed has a free hand more. So the basic understanding is that the economy is doing good. The non-farm payrolls are ticking higher. That means the Fed policies are still not working of slowing down the growth, or even they are working. Even if though they are working, then that still means that economy can take more strain. That's what that means. So so the Fed. So the reason that this happened, the green red candle here happened because the market thought that now that the economy is much more stronger than what is expected, instead of the unemployment rate going up, it is coming down. So Fed will be aggressive, if not, so the understanding was that 50 bips coming up in December, then 25 bips in February, and then perhaps 25 bips going forward. But now it seems like that equation has changed with this report, and people are still getting hired. Salaries are wages are still increasing. We saw it from yesterday, even though they're cooling, but PC is still up. So that thing is still going on. So expectation is that now I think the trajectory is 50 bips December, pretty much guaranteed. Then 50 bips in February. That will kind of push the markets pretty decent to the downside. And March, if Fed goes 50 bips in February, March will make new lows in the market. Pretty much, March. Yeah, I think March will make new lows in the market. Perhaps around it will breach about. I think that 3,500 mark. It will breach about there, and very likely it will test that 3250 mark. Not seeing, and that should mark the bottom for the markets about 32 for the next year. 3250 should mark the bottom for the markets next year, going forward, and that's coming from math again. It's not that just some number out there. There is something called multiple on S&P. Right now the multiple is it's I think 18, and I'm looking at that multiple to contract to somewhere about 15. Not looking for sub 15, but between 15 to 16, 15.5 would be a very good number. And that contraction will come from the multiple contraction will come from earnings contraction. We are still waiting on that. That hasn't happened. Q1 should bring us that multiple contraction that we are looking forward for into March. So that's where I'm looking at market to move lower. But for now, I think it's going to be very, very, very range bound. Perhaps let's get into that trade here, not the trade, the technicals. So bigger picture, and then we'll see why the reason that we got this number 40 50 40 50, and I exited that. But right now, expecting it to come back down here, right? We are right about here on SPX, or rather ES. Bounce here will very likely, fair enough, let it bounce, and if it bounces again 40 50 to the upside, and the if the MACD and SMI are still correct, then we are still gunning for about 4150 into CPI print. But if not, if this number breaches here, 4013 or something like that, the upper inner Bollinger Band, it is right now fighting it. If it breaches there, expect it to come back into 3969, 3970, the 5 on the weekly. This is a bigger picture, and a bounce there that breaches, obviously it's going to push all the way down here into 3930, 3925. Very likely, I think if it happens today, it's going to hold this number. I don't see it pushing below this number. And the reason I'm looking for a downside, because it's a Friday, and not sure anybody wants to be in the market today, or buy it for holding over the weekend. I don't see that happening, but I could be wrong. But that's the general thesis that I'm making, and I'm expecting, again, we'll see what the other factors are doing. But if the math is right, if it starts to move below, and it should come back down into 3965 to 3970, if that breaks 3930 to 3925. This is the range that I'm looking at to the downside. Not really plotting anything below there. There, the mean and the 8 on the weekly should backstop today's drop if it happens. Again, to the upside, 4050, that clears 4137. This is the bigger picture. Now let's go back on the daily. Again, this number, this line has acted as resistance one more time. So far, at least so far, it has acted. Yeah, it closed above there, but that doesn't make, one day doesn't make any difference. And the technicals were there for it to come back down. This took some while, and it was detached from its 5. Yesterday we saw this thing again, detached from 5, come back down, bounced here at the 50 moving average on the daily, and today was the day it had to come back. Yesterday I was waiting for a breach of this number and come back down into 5. Did not happen. Today it happened. It will breach here, and the ES broke here and came back down 4020. I exited about 4015 based on multiple, right about here. So based on this line, I exited my trade 4015 on the hour. This is the chart that I follow. But let's go back to this chart. 5 breach. Basically, this is what I was looking for the breach, right? 4050, 200 moving average. It broke. Then easy 5 and easy 8. Then next up is right about here, 4000, 3990. So next, that's the logical number next. That breaches, the mean is right about 3950. Uh, yeah, should happen if if we see US 10 pushing up. We'll look at US 10 in a minute. But if you see US 10 pushing up, for now US 10 is running into a resistance. We'll see how it resolves. But if US 10 starts to pushing up, it will come back down into 3993 to 4000. Should that breach, very likely 3959 to 3960. Should that breach, very likely push into 3930. Not really plotting anything below 3930, and all of these points are bounce points, and not really plotting anything below 3930 as of now. Well, we'll reassess the situation if it does come back down to 3930, and if it does indeed breach there, then very likely spot is 3920. Definitely not plotting anything below this. But again, there's nothing definite in the markets. If it starts to push to the downside, we'll reassess the situation right around 3930. If it breaches 3920, 3925, that breaches 3910. And if if it starts to breach below the inner lower Bollinger Band right here at around 3920, 3923, very likely scenario it will end up around 3900, and somewhere about here, right? I don't foresee that happening as of now. I definitely don't see that happening as of now. But if if Apple starts to push down violently, then we'll see this happening, push below this 100 moving average on the daily. For now, I think this is the range to the upside, the 200 moving average, to the downside, the 100 moving average. For now, this is the range, I think. Next week, if it breaches below here, then we'll see probably come back down into the 50. Right now, not seeing that. All right. So yes, here, if you're trading immediately, this is what I was watching. It broke here, and the next logical step was if it breaches the 50. Next logical step was the 200 bounce. So this is where I exited my trade, and it is still holding that. Very likely scenario. I think it will hold it here for some time, but if 10 years starts to push to the upside, this will breach below and move down into this number right about here, 39.80 or something like that. Right. Let's get into, well, Costco coming back down, no surprises there. Let's get into this number, the US 10. Okay. Right. Right. So this is the chart that I've been religiously following, and this is what makes my bread and butter for me. So I take this chart pretty seriously, and this is the reason that the market was moving lower, and this is the reason the market was moving higher. Now, per technicals, it had to come back down, and it did come back down. The technicals are there for it to push further down, but for now, here is a major technical. It had to hit that number and take a bounce from there, which is exactly what is happening. And the bounce could last all the way into right about here till the 3.68 to 3.69. If that happens, then market will obviously either stall around here or take a or either push to the downside, and depends on how fast this move is coming. For now, 20 bips, about 10 bips moved. It was 13 bips, it bounced, but right now it's calming down because it ran into a resistance. But if it starts to push to the upside, I'm looking at 3.68, 3.69, right? And not actually looking forward for anything beyond that as of now. As of now, we'll see the same data on the daily. But as of now, this is the bigger picture. And if breaches here, for some reason, 3.77. And the MACD is still crossed to the downside, right? The MACD is still crossed to the downside. It has to at least kind of make some effort to push it down. So I'm still looking at, so when I'm looking at this bounce, I'm still thinking that this is an ephemeral bounce. I'm still thinking that this is an ephemeral bounce. I'm still thinking that the CPI will come in lighter than expected. I'm still thinking that the next FOMC is 50 bips. I'm still thinking that that will push it down, perhaps further into, if it breaches here, 3.49, then we are looking at a push into 3.27, then very likely end up somewhere about 3.2. CPI will tell what happens with this. Till then, I think will be range bound, will be a short-term range bound actually on US 10. Let's look at the same data here. There you go. My understanding is was that it will come back down to this number and bounce, and I still think that it will come back down to this number before bouncing. For now, same story. 5, it clears the 8, right? And if it 8 clears, then we'll look forward for a push all the way up into 3.72. For now, it is holding the 5. The 5 is not letting it go up, but at some point in time, I think the 5 will let it up and push into the 8. But I still think this needs to come back down. I still think it needs to come back down. I still think it needs to come back to 3.48 for another bounce here. Cool. What would be the trigger? I think till CPI print, I still don't see anything else that is coming up, which will push the 10-year up. This perhaps is a technical bounce, but after the bounce, I still think it needs to push to the downside and test this number right about here, or even breach this number. For now, I think the bounce was necessary here. All right, let's get into the 10-year here. Right, this is the resistance that I was looking at. It is getting into this resistance, and very likely it's going to push down. 1 hour 5 is detached here, 3.55, and this is on the lower time frames, so this is tradable. And this theme is happening on the higher time frame. So this is the longer term thought process. This is the shorter term. If you're trading something, this is what you want to be watching and trading. And let's look at another data point, which is DXY. And uh, there you go. So we were looking at this line. We were following this super trend right here. It was holding this DXY, and we were looking for a break below there, and it broke below there and came back into this line. And we're getting a nice bounce from there, right? Got a really nice bounce off of this 50 EMA. Now, fair enough. Let's see how far of a bounce it is. And even though if it's a bounce, even if it comes back all the way into 105.80, which I'm thinking it will, I'm still thinking that this is ephemeral in December at least. I'm still thinking that this is ephemeral. At some point in time, I think it'll hit this number and come back down. If it comes back down into 50 EMA again, around 104.60, 104.30, I think it'll breach it to the downside and test this number 103.60. The MACD is still crossed to the downside. We want to see this thing through. For now, the technicals are there for it to bounce on the higher time frame. The MACD, the Williams R is all the way at the bottom here. So we might see a bounce, and the bounce could very well last into 105.80, right about here. Look at the same data on DXY. Right, there you go. Okay, bounce right up till here. And it is taking a breather. So for DXY to move beyond the 200 moving average, right about here, it will take quite a bit of strength, and it right now it doesn't have that strength. Right now it doesn't have that strength to push above this 200 moving average, and we'll keep a watch, very close watch here on the MACD, daily MACD for DXY. Right, keep a close watch on that. If it starts to curl to the upside, and if DXY crosses above the 200 moving average on the daily, then we'll look for a daily 105.93 to 106. For now, I think for today, it should top here, right about here. And if that clears, then again a test of the inner Bollinger Band, 106.50. If that clears, again a push all the way into 107. I don't think this is going to happen today, but anyways, I'll be watching the 200 moving average very closely. Uh, for it, if it breaks above there, then I'll take it seriously. That means it has some strength there, right? And obviously, the easier trade, DXY moves lower, then gold moves up. DXY goes up, gold moves lower. And we've been tracking gold since it was in 16, mid 16s or something. Yesterday it hit somewhere about over 18, I think. If somebody was in that gold trade, congratulations. Right. And this last one is VIX. VIX, I'm still thinking that after this ephemeral bounce here, very likely into 22 or something like that, I wouldn't pursue VIX as a serious candidate till it clears the 200 moving average on the day on the weekly. Right, there's a pretty decent resistance about 200 moving average here. If it clears that, then I'll start taking VIX seriously. Then we might have a repeat of this on VIX. As of now, I don't. Right, this has been bottoming around here. VIX has been bottoming around this sub 20 or around 1950, somewhere about there. Yesterday, I think it hit 1980 or something like that and bounced off of that. But for now, I think I'm still thinking this is an ephemeral bounce. I'm still thinking it needs to come back down into probably sub 19 or something like that. I think we'll have a decent Santa rally. If CPI, and all this could change if CPI print comes in hotter than expected, then I'm expecting VIX to kind of bounce back up, 25.30, clear that and push all the way into 28.50 if CPI comes in hotter than expected. That's the main thing. CPI hotter than expected, markets will burn. Right. The bigger picture right about here. Let's look at the same data for VIX. Right. So this data is tradable here, and VIX and DXY are in the same sort of a boat, if you will. MACD is about to cross, still hasn't crossed, and again it is struggling at the 5. If it clears there, then the 8, 21.20, 21.30. Let's put a range on that, 21.30 to let's say 21.50 range, right? So 20 bips range on that. I'm expecting it to hit that and take a breather from there. Williams R is all the way down here, so breather is pretty much expected. But if it clears here, the 8 on the daily, Expect it to come back up onto this lower inner Bollinger Band, about 22 or 22.10, somewhere around there, and very likely start to take a breather from there. And that would be a breather. If it clears the 8, bright chances of hitting this the mean this time. Why? If MACD crosses to the upside, it hasn't still crossed to the upside. But if MACD crosses to the upside, it will start at least making a short-term trend. On the VIX side of things, we still have the weekly on the downside here, right? We still have weekly, but it is very undecided here. It's at the zero line. It's crossing up and down at the zero line itself. So we'll be watching this thing. A good bounce, a better bounce for VIX would be 18.3. Sub 19, so somewhere sub 19 would be a very good bounce for VIX. This is suspect. This is suspect. So that's the reason I'm saying this could be very ephemeral. 22.30, 22.50, somewhere about there, and we come back down. Right. Oil. Oil. Do we want to look at oil? Well, let's look at oil too. Hits the mean, takes a breather, comes back down. Same thing, 5, 8, trying to bounce around here. And this is a China reopen play, and copper is a China reopen play. Both are pushing. I think this thing is China dependent. But if it breaches below here, the technicals are still saying that it's not going to breach below here. It's going to bounce, and if it clears the 21 here, about 82, again it's going to test for the mean about 82.60, 82.70. If that clears, it's going to go hit this 84.60. All right, that's the path to the upside. However, if it comes back down below the 5 and 8 on the daily, if it breaches 80.15, and then it's going to move down into 78.20. Let's look at the same data here. The range is same again, right? Upside, it's going to go test this to the upside. If it starts to push to the upside, then it's going to go test this number here. And the MACD is still not crossed to the upside. So until the MACD crosses, it tried here, it failed. But until the MACD crosses to the upside, I still think the USO will end up somewhere about here, 87 or something like that, by the year end. And if if it has to clear this number right about here, the 100 moving average 81.80 to 82, and then I still think it will end up around 87. And then this is a China reopen story, right? And there are production cuts that is happening with OPEC. And should that come into picture, that I think today, tomorrow, December 4th, I think there's a meeting going on for OPEC. So let's see what they say with that meeting. If they signal more cuts, and it will push through very easily. It will push through 87. If not, then we still have this number to deal with on the monthly, right? And the MACD is still saying that it is still crossed to the downside, and MACD is MACD is still crossed to the downside. It is still saying that that's a trend. So let's see. I'm still thinking that somewhere in January or something like that, it'll still come back down and test this number 72.60. Right. Okay. Right. Anybody, anything in particular? Can you please look at SLV GDX? Yeah, to the upside, if the 10-year comes down, okay, it is hitting a pretty decent resistance right about here. Yeah, so it did hit a resistance. It is coming down for now, and I'm thinking that it'll find some sort of a bounce around 20. The the 50 on the weekly. Very likely this is where I think it'll try and bounce. But if we find that the 10-year is relentless in its move up, then very likely it's going to come back down, breach this 50, and come back down into the 200, about 1950. That's that, and to the upside. And I'm still thinking that the US 10 will, or rather, the Treasury yields will still come back down. That's my understanding still. This bounce, I'm still thinking this is an ephemeral bounce on 10-year. So if 10-year starts to come back down, or whatever you watch, 2-year, 3 months, or the yield inversion, or whichever metric that you watch, if the treasury metric is down, then this will move up, right? And to the upside, this will act as resistance about 2090, somewhere about that. If it clears there, then we're looking forward for a push all the way into 2170. Yeah, the 100 moving average on the week. Let's look at the same data here, pushing up, and it's detached from its 5 right about here. Right, so wow, look at it, Williams hour. It's all the way up here. Anytime that happens, it needs to come back down. But the thing is that right now here we still have more room for this green line to go to the upside. So could be an ephemeral push to the downside initially, but I still think that if the treasuries come back down, the yield come back down, then this still has legs to the upside. Very likely it'll hit this 2150 somewhere about there. But let it hit this number again to the upside. Let's see how it behaves here. About 2090. If it clears there, then very likely it's going to push all the way into 2170. GDX be the same. There you go. It should be the same. Yesterday was a big day for that. Simply, DXY down. Of course, the 10-year or the treasuries, whatever that you follow, that's the driver, and DXY is what will move all of these names, metals. I still think this is a clear trend to the upside. I still think that MACD is crossed to the upside. I still think it will come back up and test this number and push all the way into 3180. That clears, very likely 32. Uh, the Gold has been a pretty decent beneficiary of this push to the downside in DXY, and and if you overlay the chart of DXY, this is exactly what you will see, right? So DXY moving up, this thing coming down, DXY coming down, this thing moving up. Straightforward stuff. Cool thing. Anything else in particular? 5 minutes to open. All right, let's move into live trading.